Hi, welcome to MPod, the podcast series brought to you by Mehta Equities Ltd. In each episode, we try to cover up a lot of industry experts, market experts to come and join us in this podcast and share their experiences, their knowledge, and their outlook on the markets as well as the industry for the viewers of Mehta Equities Ltd. Today, if you are an investor or a student, this podcast will help you a lot to understand about the markets as well as the trends in the market. So now today we have a special edition to start with the special guest, Mr. Nikhil Rungta. Welcome to Mehta Equities podcast, and he is appointed as a co-chief investment officer for equities in LIC Mutual Fund, and he has joined recently with the LIC Mutual Fund. And earlier to this, he was with SBI Pension Fund, and by professional, he's a chartered accountant, and he has earned his MBA from Finance Nasim Munji Institute of Management Studies. And Mr. Rongta brings a lot of wealth and experience in the markets as a equity fund manager, and his views in the markets are well appreciated in the investor community. And we happy to introduce Mr. Rongta to this podcast and welcome to him to start our discussion today. So, to break this ice and start to know about you and your career in the field of investment management. So, how do you see yourself from the early stage of MBA and now at the CIO level in LIC Mutual Fund?
So, what drew me here primarily was the complexity and the nature of financial market in the investment management. I had a strong aptitude for mathematics and statistics, and that is what pulled me up toward investment management. And ability to apply these skills in the market was very useful. Early exposure in my life to these mentors and role models also played an important role. Their passion and success stories in the investment management field inspired me. More importantly, what motivates me is this constantly changing landscape in the investment management. Variety and unpredictability of the market is very important.
True.
I see positive impact of my investment strategies on the client's financial goals, and this is a major driver for me being part of investment management. More importantly, or the most important, is helping client achieve their financial goals through their retirement planning, wealth accumulation, or institutional growth. This provides me a deep sense of fulfillment.
Yes.
So that keeps me motivated in these particular things.
In your lines, you said the role model. So, if you can just give who was the role model who drove you into these markets?
So both on the international side as well as on the domestic side. On the international side, I do look forward to Mr. Buffet and Mr. Munger, Charlie Munger, and on the Indian context side, of course, Mr. Junjunwala was always there for. I mean, he's also known as the Warren Buffet of India.
Again, father of capital markets.
Yes,
So everybody has
exactly.
the same role model.
True.
So a lot of viewers we have from the educational institutes and the students. So what is your guidance for a student right now at this market conditions? So how do you want to guide them? Should they be part of this capital markets, and how should they come into this sector?
See, more important is they need to have passion for capital
Right,
market to be
perfectly right.
part of this particular stream. In terms of what they should do, they need to keep up to date on the market trends, economic indicators, financial news. They need to have the ability to analyze financial data and interpret them. They need to have proficiency in statistical analytics.
Right.
I mean, what is more important is successful investing require patience and a disciplined approach. They should avoid temptation of short-term gains and focus on long-term value creation. They should understand the risk tolerance and strategies that align with their financial goals as well as risk.
Yes.
Because what we are seeing is they just primarily want a short-term gain. So that is more important. But the most important thing which my guidance to these newcomers would be maintain highest standard of integrity and ethical behavior.
Right.
Trust and reputation are paramount in our capital market, and they should always prioritize the interests of the clients before there. They should build strong relationship with trust and transparency. I mean, that is what I would like to guide and recommend to them. This market can be volatile, and learn from your mistakes and setbacks. Don't just down. It should be a continuous learning for them.
Yes.
So that is what my recommendation to them would be. So be open to new ideas and innovative thinkings, and it's always evolving. And they should create a passion for capital market.
Yes, great thoughts. So I just want to take you to the COVID times. So post COVID, have you observed any big changes in the markets, or any observation in the mutual fund industry or in the investor category?
So what we have seen is the affiliation toward alternate financial instrument that has increased for the investors. I mean, earlier pre-COVID, this space was dominated by bank deposits, but post-COVID, incrementally, the households have started investing money in the financial products other than bank deposit, and that we are seeing in terms of inflows, which we already know the numbers.
Hmm. So, but a lot of people have not seen a big market correction post COVID. So, is there any learning from you who they can get advantage of that, so that in post COVID markets have rallied? There are no
Correct.
long term negativity seen in the market. So, what is your advice for the new investors?
So it's not about that market have just rallied and they haven't seen any correction. I would rather put it this way, that post COVID, what we have seen is one-sided rally in the market,
Right.
but that was backed by similar growth numbers in terms of earning. So if you look at the multiples, they haven't gone anywhere. It's trading. I mean, the Nifty multiple is at around 21, 22 times
Right.
forward, and the average multiple is around 20, 21. So multiples haven't gone anywhere. It's just that the market have rallied, but we haven't seen the earnings. They have also rallied.
Okay.
So, of course, the near term, I would say that we might get minimalistic return in the very near term, short term, but over a long term, things are very good. Looking great, driven by the government policy, stable government. So, of course, my suggestion would be start SIPs.
Yes. So coming back to the LIC Mutual Fund, your company, you recently joined this.
Yes.
So we would like to understand the vision of LIC Mutual Fund and the upcoming milestones you are aiming at.
Okay. So the vision for of LIC Mutual Fund is to be a trusted partner in wealth creation and a mutual fund of choice. My vision, or I would like to toward that vision using few key milestone. And what would be those milestone would be consistently outperform the benchmark across schemes, demonstrating strong risk adjusted returns, achieve high alpha generation for our investors, then develop different types of digital platform where we can increase more transparency for our investors, timely information sharing with our investors, implement comprehensive risk management framework to monitor and mitigate risk effectively, regularly conduct stress test analysis and scenario analysis, which helps us to see where exactly our portfolio stands vis-a-vis benchmark as well as peers, promote diversity and inclusion within the investment, both in terms of stocks as well as the department, and invest in continuous development of my team as well.
Okay. Okay.
So, in short, if I have to say, then I want to position LIC Mutual Fund as a sustainable growth company with a industry leadership and a long-term success driven by exceptional returns.
Okay. So let's talk about something on the technology side. See, we have heard about AI into every sector. So
Correct.
how do you see AI into mutual funds? So has that any effect in the industry?
So definitely, it has just started. I will not say that things are pretty fast in Indian context specifically, but of course, it's very useful for us in terms of data analysis, stress testing, reverse checking of various scenarios. We are implementing those in a slow and steady manner. These are very helpful. I mean, the recent one is the ESG domain as well. So we are implementing in a slow and steady fashion, but yes, we are not wary of them, and we are welcoming them with open arms.
Okay, okay. So last financial year, we have seen markets have delivered almost 30% return. So to whom should we give this credit? To the domestic investors, for a government, or the whole environment?
So in terms of domestic investor, I mean, retail investor definitely have played their part in the ongoing market rally. In June 24, we have seen that the SIP flows was around 213 billion rupees, so which is the highest. Next, coming to the DIIs, their ownership in the companies is on an upward trajectory. If you see their ownership, it's at 14.5% as of March, which is at second highest level since March 2005. The third point is in the last decade, the retail participation have also increased. They now own 9.4. I mean, they used to own 9.48% in June 14, which is 10 years back. Today, they are owning 11% of these companies. So everyone have played their part in terms of FII perspective. I mean, even though our earning trajectory has been steep, forward estimates are amongst the most sustainable. I mean, if we see last 1 year, there have been 14% upgrades which have happened in the earnings.
Okay.
So because of these upgrades, your valuation keep on coming down. So further, we have seen a stable government and continuation of the past policies. I believe the flows from both government and FII would continue.
But last one financial year, FIS were net negative. So what was the main reason for that? If you can.
So see, one of the key reason is the interest rate, global interest rate. When you get a higher interest or income in your home country, you tend to go there.
Yes.
The second is the rupee depreciation, of course, marginally, but since rupee have depreciated, the income in the dollar terms is slightly lower. Third is in the emerging market indexes across the globe. See, China is generally one of the big part, and we have seen China coming down drastically. So a lot of global funds have reduced their allocation to the emerging funds, and India being part of that allocation itself. If your overall allocation to the emerging funds comes down, India also comes down in that.
Yes.
That has been another part. So I don't see, and also if you see the primary market, there have been good inflow from the FII side as well. So if you merge the primary as well as public secondary market, then I don't see much outflow from their side.
So, okay. The major part of the stakeholders are with promoters. So if you see last 6 months, a lot of promoters are selling their stake. So what is your comment on that?
See, uh, if you see most of these promoters who are selling their stake are either selling it either for some charity purpose or for some other purpose. I mean, they are clearly defining what
The use of
exactly
the
the
fund.
use of the fund. Of course, we can see that globally or historically, this has been always the trend. When you build a company and when markets are at such a high level, I mean, they generally try to cash out something. Plus, what happens is if you see uh, sustainable growth going forward over next 5 or 6 years, sometimes we see that the promoter should have brought in the investors early before this growth comes in, so that investors are also part of that growth.
Yes.
That could also be one of the reason that over next 4 5 years we are seeing a sustainable growth and earning momentum in India continuing.
So going back to the global markets again, so what are the trends? What are the economic activities which you as a LIC fund manager are tracking?
So in terms of global, what we are seeing is how is China plus one moving out. The second one is how is the interest rate policies across the globe moving. Thirdly, what are the chances of Mr. Trump getting the presidency? Because once he is in, the focus will move more on the protectionism
Yes.
rather than the current scenario. So these are 3 4 factors which we generally focus on as of now from an international perspective.
So with respect to that interest rate scenario, I think markets are going to discount a lot of cutting of interest rates very soon. So how do you what is your take on that?
So see, once that happens, what we have historically seen is the investors start turning bullish on the emerging market, because that is when they see rates coming down, they have made money on their existing portfolio, and that money then start moving to the emerging market, because that is where you get higher returns. And historically, the empirical evidence also suggests that this actually is the case. So
So are we at that point of time right now? India is in that place where things
So
can.
definitely flows definitely will come. Of course, when the rate cut starts is a matter of time. But on the flip side, we need to keep in mind that if the rates in US are coming down, it probably is a signs that the growth is everything is not proper in US. So we need to be wary of the companies which are having US exposures as well. So everything have both dual side of the coin, and we need to take care of both of them.
Okay. So coming back to domestic markets, there are a lot of sectors which have already rallied, be it railway, be it defense, or so. Which are the sectors where LIC's mutual fund as a fund manager you are tracking or you are bullish on?
So as a house, we are optimistic about earning growth of the manufacturing and capital goods sector. We are bullish on the exports, specifically the chemicals and engineering goods, and also the discretionary spending consumer sectors. These sectors are in a sweet spot because of the current macroeconomic conditions, and also because of the favorable government policies. Discretionary spending is actually in a structural growth opportunity, and it's backed by your young population, rising income, urbanization, and increasing demand for premium products. So many companies in this sector are expected to experience a spike in their earning growth over next few years. Government policies like PLI have encouraged the manufacturing sector. The strategies toward import substitution and export promotion have expanded the role of Indian manufacturers. Capex from the power, real estate, and renewable energy is another opportunity. So there are a lot of opportunities which are there. In terms of return, we believe BFSI have contributed around 50% of the index's profitability, but it has not yet contributed to the returns in terms of market cap.
Yes.
So, if not in short term, but over medium to long term, we believe BFSI as a sector will overcome. That's likely to outperform. And if you see the FMCG pack, in 1Q CY24, that is from Jan to March, the sector have underperformed Nifty by 8 odd percent because they were concerned about the rural growth. But given proper monsoon now, government policies, and expectation of slightly populist budget, we believe this sector can also perform in a good manner.
So before talking on the budget, so how do you see the new age companies, the new age business models going ahead?
So I believe they would definitely be disruptors. But yes, till now, what has happened is these companies have seen investment primarily in the private market. So the valuation, the multiples they have seen or they expect is a private market, but this is public market. It's public money, not private money.
Yeah.
So they need to be aware that this is a public market, it's a public money. So the valuations and the multiples will be of public market and not of private market. Of course, they are disruptors, I agree, and few of them will become definitely very big, but need to watch each and every angle.
Okay, so in particular with mutual fund industry, recently we saw some kind of scrutiny being done on the mutual fund. I don't want to name this company or the fund right now. So will that kind of headlines may disturb the markets or government to force lot of new regulations coming in?
See, some more stricter requirement for mutual fund might come in, and these type of news might increase short-term volatility as investor react to the uncertainty and the risk. But I believe they could shift to high-quality, well-managed mutual funds, and which are having strong governance and compliance
Like
records.
LIC Mutual Fund.
Definitely, I mean, as LIC Mutual Fund, and these are short-term disturbances and volatility. What I believe is introduction of these new regulation or enhancement of the existing one will strengthen the integrity of mutual funds, and
Yes.
this will ultimately benefit investors and market stability.
So before we come to the budget comment and outlook from you, so last 10 years of Modi, markets and mutual fund industry has grown from almost 10 lakh crore to 61 lakh crore. And AMFI in some reports says they are going to target 100 lakh crore in next 3 to 5 years. So how do you see this growth and how will this come into place?
So this growth, I believe, is good and it is sustainable. Over the last few years, AUM of DIIs have witnessed a sharp increase, and it's driven by substitution of bank deposit for equities by the investors, and hence an increase in SIP contribution over the past 5 years. Domestic mutual fund AUM as a percentage of bank deposit, it has increased from 20.6 to 28.5% currently,
Wow.
and we expect this to continue going forward. Basically, a financializations of savings and higher retail participation in equities, and this will continue to impact your market multiples.
Yes. Coming back to the last question on the budget again. So we are about to see the budget next Tuesday. So what is your expectations on the budget and what do you suggest the finance minister to focus on which kind of part of this financial world?
So definitely, we expect the existing policies to continue. The focus on the capex infra theme, uh, should not there should not be any major diversion of focus areas from the existing ones. Uh, what we as a house believe, while because of the recent election result, we might see some populist measures coming in, but government already have around 0.4% of fiscal deficit. That's around 1,20,000 crores of additional, which has come as a dividend from RBI, which
Right.
they can use for
Such kind of activities. Yeah.
activities. Yes. So we believe the existing policies will continue. The focus on manufacturing capex will continue. Of course, defense as well. Other apart from that, the focus on populist measures will come in from this additional dividend which they have received from RBI.
Nice.
So that's our view and our suggestions to continue the existing ones.
Yes, yes. I think it was a great session having with you, and thank you for spending few times with us. And all the best for LIC to see its vision and all. And we hope this podcast will help our investors, our students, our viewers to have a lot of knowledge about the markets and outlook on the markets, outlook on the budget. So thank you very much. Thank you for watching this session.
Mutual fund investments are subject to market risks. Please read all scheme-related documents carefully.